All right, traders, let's jump into our weekly recap for the week ending September 22nd, 2023. Let's get into our trades and quick look at the markets. Let's start with the markets first. Pretty difficult week in the markets overall. If you can tell by the weekly chart here, a pretty big red candle on SPY as we came down and broke through this previous pivot point here around 431 and change, closing at 430.42. So breaking through that, really, if we're taking a look at the internals, I mean, your MACD is falling, your RSI is falling, weekly looks pretty ugly right now, breaking through the 21, heading to fill this gap on the dailies down here, which is also where the 50 EMA is resting around 422. So that's our first target as we look at it. And if we move on over here to the daily chart, pretty good head and shoulders. I mean, you've got your left shoulder here, pretty defined head, right shoulder here, and now breaking through this neckline, which all depends on how you draw it. Some people will draw a little bit more diagonally between the two bottom necklines here. So you could have broken through this neckline back up here. For some, I'm just keeping it horizontal with the lower of the two here. Either way, you broke the neckline. You've got MACD continuing to fall. Now RSI is falling, and now it is in oversold territory. Does that mean you should jump in and let's get a bounce and a rally here? My suggestion would be no, but let's keep an eye on where things continue to go. You are at the 3 ATR. In fact, you broke through that. So it is a pretty extreme oversold-ish looking area. But just any kind of a bounce here that pulls you out of this oversold for a day or two might be all that you need before we head lower. If you really consider this a head and shoulders and you do have a neckline break here, if you take a look from the neckline to the top of the head, about 30 points on SPY, that would put us down around the 4,000 mark. So I think somewhere between 4,100 and 400 on SPY is what you would be looking at. That's going to coincide pretty close to this weekly 200-day moving average as it's moving up. Let's see if we get there. I mean, obviously, the first thing might be, do we fill this gap that we have here, which would take us to about 422 on SPY? Then you have the 200-day moving average about 418 or so below that. So you've got some areas here, but you don't have a lot of potential support. You might get some support in here at this previous pivot high. It's kind of not a great area, but if we're looking for something to grab onto, maybe you take a look at this as a potential area in here. So lots of stuff in this 420, 422, 418 area. There's a bunch of things that has to stop it before we get down into the 400 level, but we'll see where we go. Otherwise, fairly ugly looking, a bit oversold on the daily, but nowhere near that on the weekly. So I think there's definitely some more pain to come. The question is, how long till we get there, and how much of this do we sell off on? And I think we could meander around here. We've got this gap that we just made, so we've got another gap in here that at some point we may want to try to fill. Maybe this gap gets filled first in here around up to about 438, and then we can reverse lower. We'll see. Lots of little gaps now starting to form. Lots of things. There's also a little gap up in here as well too. So we made a handful of gaps that now we have some opportunities to fill. I think that's pretty small ones, so not a big deal. Anyway, PSAR is in a downward trend on the weekly, on the daily. MACDs are heading lower. RSIs are heading lower. Not a good looking outlook on SPY. Same thing on the Qs. We did not break this previous area here. Let's extend this line out a bit as we have. So we have this previous pivot point area here where we had stopped before. So it was a high back here that we fell off. Then it was a support back here. Nearly a support back here. We've bounced on it a couple times, and we've bounced on the Qs. same thing. MACDs are heading lower. RSIs are heading lower. You're getting a bit oversold on the daily, but we have not hit like a 3 ATR. We're only at the bottom of the Bollinger Band. I think, this is a pretty good spot to watch for the Qs. A break below this, pretty ugly for tech. And then IWM on the small caps here. Pretty ugly looking week last week. So that was a pretty big down week, breaking through a previous low that we had. We can pretty much just take that off the table. PSAR downtrend on both. We're not looking to reverse anytime soon. MACD's RSIs are heading lower. You've got a gap in here. Maybe we get a gap fill. I would not be surprised if we don't get any kind of a bounce this week, but any kind of a gap fill here would give me the reason to get even more potentially short over the next little bit. If we look at the number of S&P 500 companies that are below or above, I should say, above their 50-day moving averages, we are now down to 18%. So this is a pretty low area. Normally when we get close to this, 0.1, that's where we have seen some pretty violent reversals higher. And then obviously when we get above 0.8, we see the same thing coming down. So we're not far off of that, if enough on the weeklies. So if the weeklies continue to fall, or even on the dailies here, if this daily gets down to about this, 0.12, 0.1 range in here, we're starting to see it getting oversold. Again, we could get a bounce. Those bounces have been significant, but we every time we get into that area, we bounce. Now you're talking 18% only on the daily chart, or even on the weekly chart. Only 18% of the stocks in the S&P are above their 50-day. That's a pretty bearish look for it. And while we can hold down into these territories, we really don't get extreme below this 0.15 area too often. So when we do get it, we usually get a decent reversal coming off of this. So we'll keep an eye on that. VIX up to 17, if anybody cares. US dollar on the session on Friday here. Again, into this overbought area. I think you might be getting a little MACD rolling over, flattening. I'm not saying the dollar doesn't go higher, but I think this 105 area is a pretty good area to keep an eye on in here. In fact, if I look at the weekly and we want to pop a trend line in over here where we previously were, that's almost identical to where we are now. So that's where we came up previously and stopped. That's where we came up this time. We haven't necessarily stopped and flipped over. So we'll keep an eye on the dollar, but I think it's getting a little bit overdone. Now, TLT is really where I'll spend a few minutes here today. I've been railing on this for weeks and weeks. Stop pouring your money into TLT and TMF. Stop listening to these gurus out there telling you got to get long bonds, get long bonds. Why on earth do you want to get long bonds here? Rates are not coming down. In fact, I think bond yields could go a little bit higher, especially on the 10-year. It's on fire right now. You got bond yields heading higher. Okay, why are you now buying the bonds themselves with yields going higher? I think yields can go lower. You've broken support on bonds that dated back to October of last year. You've now broken that on the weekly. You're down at the 3 ATR. MACD is heading lower. Just from a technical standpoint, this doesn't look good, but you got inflation running crazy. You've got the Fed telling you we are not reversing course anytime soon. Okay. Until the Fed reverses, bonds will not go higher. Okay. They, in fact, may raise again at least another 25 this year. Inflation's not under control. Nothing's where they want it to be. They're saying they're going to stay higher for longer. Stop listening to the people that are telling you to buy TLT and TMF. They're costing you money. If you bought it anywhere in the last month and a half, you are losing money on TLT and TMF. Oh, but it's a long term. It's going to go long term. Yeah, that's great. Okay. you're catching a falling knife. You have not seen any kind of recovery in the bond market yet. And taking a look at TMF, this is getting doggone ugly. We have not been down this low, okay, in a long, this is a declining asset, by the way. So you are buying a long-term hold on a declining asset, okay? It's a leveraged ETF. It's designed to go lower, okay? Well, I think we're going to bounce in the short term. You aren't bouncing in the short term because rates are probably heading higher, which means bonds are going lower. The Fed's not reversing. Okay, stop the madness. I can't say it enough. Get out of these things and just wait. It doesn't mean they won't ever go up. But I think if you want to play it longer term, you need to play TLT, not TMF. Okay. TMF is just going to slowly decay on you while you wait for the day that you think bonds may eventually go up. Are they overdone? I think they're getting oversold. Can they go lower? I absolutely think they are. And if you didn't think they were going lower, well, you were wrong this week because they gapped down significantly. Now, a little recovery Friday, but Thursday was just an awful day for bonds. Okay, the Fed's telling you they're not reversing. Rates are not coming down. Why would bonds go up? All right, so there's bonds. Looking at 6A, I think this is holding up pretty well. In fact, it's one of our trades this weekend that I'm giving out to the Discord members. We'll be doing a trade on the Aussie dollar. It's hanging in there pretty well on the daily. If we look at the British pound, that is not hanging in there. This thing looks awful. So the British pound continues to fall. Maybe we'll find some support. It is extraordinarily oversold on the daily, but until that US dollar starts to calm down a bit, you're not going to see it until rates stop going up. So as rates go up, the dollar's going up. All of these things are going to fall. Canadian hanging in there okay too. Just like the Aussie dollar, the Canadian dollar is hanging in there. It's a decent trade as well. And then the euro, it looks like the British pound, which is ugly here, and nothing positive to say about either one of those, except, and we have some strangles on, and I'm okay with where we are in strangles. We've got some good gains. If we take a quick look at oil, oil continues to be strong. Did come off of its highs a little bit this week. Had a couple down sessions, then rallied a little bit more back on Friday. Oil's overdone, but I don't know if this was the pullback. I'd like to see something on oil pull back to the upper 80s, closer to this 88 range, something closer to the 21 EMA. I'd like to see a bounce off the 21 EMA. Then I think we go higher, and I think oil goes to 100 at some point soon. As it go to 105, I don't know how high oil goes, but I think a little pullback and then a little more height on oil. And the genius U.S. government, and I'm trying not to be political here, but got a president who released all the oil from the Strategic Petroleum Reserve and was going to buy it back at 70. Well, that 70 price came and went. So now to replace the oil that we used to keep our political capital moving higher, we've now drained our inventory, and now we have no choice but to buy inventory from Saudis and Russia and all the people we don't want to deal with. You got to replace it at $90 a share or $100 a share now versus something that was in the 60s, which they said they would start buying it in the 70 range, but they never did. Okay, the opportunity is gone, and oil is now moving higher. Just a bad move by the U.S. government and a stupid move to just try to make people happy for a short period of time, yet use up all of the petroleum reserve oil you have, only to have to buy it back from Russia and the Saudis at a higher price. So it makes no sense, but I think oil can go higher, but I'm looking for a little bit of a pullback. Gold's been in a perfect sideways move. This has been a great strangle trade for us. We continue to just trade gold strangles. We've got 3 of those on right now. All of them are nicely green, one coming off pretty soon. I'm excited that Tasty Trade is getting closer to potentially giving us option trading on copper. Can't wait to get in there. This has been a fantastic strangle trade opportunity. So we'll see how that goes. And then our lean hog trades doing well. We are up 21% in 16 days on our triangle here. Lean hogs had a couple pretty good down days. Perfect. So we had a nice upward run, and now a couple downward days, just keeping us nicely inside these Bollinger Bands and moving up and down. Great moves for us to keep a strangle on this. So we'll keep an eye on it, but looks pretty good overall. And then overall, the sectors on Friday, nothing much happening. It was a pretty mixed day on the text here, slightly higher on XLE here, slightly higher, and then everything else pretty much lower, with XLY taking a pretty good couple days hits here. So XLY, your Amazon, your Tesla, getting smoked in here, having a pretty ugly looking week, down almost 1%. And then your biotechs so your biotechs in here falling, breaking support in here. Biotechs very oversold, but this does not look good on the biotech side. And if we look at regional banks as well, this doesn't look too good either. So banking sector is not looking great. Energy is not really doing enough to keep you in the game, and techs are getting hit pretty good. Not going to go through any major symbols here, but if you take a look at Amazon, it had a pretty ugly week, along with Tesla. Tesla finishing down 4% on Friday alone. Got hit pretty good. Taking a look at Microsoft, not looking too good here. We're getting closer to oversold on a few of these, but we're not there yet. And I think we keep an eye on what we've got. But I think the trend on the Magnificent Seven is definitely lower. Some pretty ugly days the last couple of days of the week. We had a call spread on AMD. That was a great call. We're able to get out of that one for a great winner. So that was one of our trades last week that we called out from a call spread standpoint. I got 3 great looking trades for this weekend. Just posted them in the Discord. Excited to get into those. So if you're looking for those, you can certainly join us in that. Let's take a look at how our account fared for the week in this volatile week. How did we do? Well, overall, we finished up $6 on the week. So our account hung in there. In fact, if we look from last week to this week, we're up $6 on Net Liq. But if you look at where we were on Tuesday, Wednesday, new all-time highs, and we're only off of those highs by about $3,000 right now. So a one-day swing, but we're close right now to all-time highs. We did close out 2 negative days, so we had 2 lost days here. I will cover these trades that expired. One was a hedge, and one was a trade, a butterfly trade that we had on NEO that closed on Friday. Other than that, good week. Overall, up $1,621 on the week. We're up $5,800 on the month so far. And again, Net Liq is up for the week. Our realized gains are up for the week, yet the market took an absolute hit during this week. A lot of people lost a decent amount, between 1% and 3% or more on most accounts. We actually had an up week and created some great realized gains. So we are close in there. We finished with a decent delta of 670. It's getting a little high, so I'm going to have to keep an eye on bringing that delta down or keeping it under the 0.2 mark. But right now, with the markets dropping, your delta is going to increase naturally. Theta is a whopping 1314, 0.43%. We finally got to that 0.4%, which is always our target theta. Love the fact that we got a little volatility back. Theta is up 1314 in theta. As I mentioned, Net Liq decent on Friday, up for the week. BP usage pretty much hanging right around this 81% mark. So BP is up. Span margins expanded. Now 10% of that is in bill. So really our margin, or our BP is around 80, about 70%, which is high. So we definitely want to keep that margin in check. We'll keep an eye on where it is. and how it's doing. But overall, we're doing just fine. We'll keep an eye on it. We've got some trades coming up here, and we're getting close to taking off some naked puts of some 112s, which will not only lock in more realized gains for the month, it's also going to drop our BP overall. So we've got good stuff going. Let's take a look at those that losing trade. So it was a Neo call butterfly. We put it on back on September 1st. For 17 cents. We let that thing go, expired. It was up at one point. We let it on because you got to let these things play out a bit more. Overall, we lost $102, not a big deal. And then again, on Thursday, we had a $150 loss on a hedge. We did put the hedges back on, so we are re-hedged again. But overall, a good week, a lot of winners. And on the week last week, if you look at it, what was the start of the week? It was 913, I believe. But man, there's a lot of winning trades in here. So we did very well, had a great week. This week ended on 2 small losses as hedge trade and an old butterfly just came off. We'll let it go. We'll see how this week goes. But good week overall. I'm excited to see where we go. I'm really kind of looking for this market to drop a bit more, and that would be fantastic. We've got 112 trades starting to edge closer to the trap, which is fantastic. It's exactly what we want. I'm okay if this market drops another 5 to 10% or so. That would be perfect for us, as long as it just doesn't do it in one day. But a 5 to 10% drop over the next, 30 to 60 days would be absolutely perfect for our account. That's how we hit 80% winners last year, or an 80% return last year, was that 80% of our 112 trades ran into the trap on these down moves last year. That's what really juiced our account. Let's see if we can do that again this year. So instead of 3% a month, you're starting to get closer to 5 to 6% a month once you start hitting the traps on the 112s. So we did some specialized 112 trades this week. I've got 4 different 112 trades that we're working. We've got the long-term 112, the standard 112. We've got a BA, the big ass 112, and now I have the FB 112. I call it the fat bastard trade. It's a fantastic trade here to really take advantage of a market that might pull back, maybe some seasonal weakness this week or next. Let's see if we can get a little bit more of a drop, get into some traps, and we'll book some trap profit. All right, everybody take care. Have a great trading week. Good luck in the markets. We'll see you guys next week. Thanks. Bye-bye.